All right, I think we're going to get started. Welcome. I'm Andrea Woodard, Senior Vice President of Government Relations and Public Policy at the Greater Des Moines Partnership. We're pleased to have a great group of participants today, and we'll probably see a few more jump on here in the next minute or so. As we would do if we were in person, we'd welcome and thank any of our elected officials for joining us. I think we had a couple sign up, local and state, and want to welcome all of them and thank them for their service and everything they're doing during this time. I'm going to ask all to put your phones and computers on mute. So if you have any questions, either throughout the program or once we go to Q&A, please enter those in the chat box. Also, feel free to email those to myself, awoodard@dsmpartnership.com, or Ryan Moon, rmoon@dsmpartnership.com. I'm sure some of you have our cell phone numbers, and do feel free to text as well if there are questions that you'd like to get to us so that we can make sure they're asked. We'll make sure to read every question so those on the phone can hear those. We are recording the webinar today, and we'll be sharing that in a recording along with PowerPoint slides following our session today. And with that, we'll get diving right into the content. I'd like to welcome and introduce our attorneys from NYMaster. Dustin Miller is not able to join us, although you do see him up there on your screen, but we are thrilled to welcome Eric Fisher and Rod Kubat to take us through some information about the Paycheck Protection Program loan forgiveness and the compliance that will go along with that for our those who have taken on those funds. So with that, I'm going to start by turning it to Eric. Take it away.
Yeah, my name is Eric Fisher. I work in NYMaster Goods Business Finance and Real Estate Departments with a practice primarily focused on mergers and acquisition and general corporate representation. Since the COVID-19 pandemic has started, our firm has formed a rapid response team that has been addressing these different COVID-19 issues. And Rod and I have both been paying particular attention to the CARES Act and specifically the Paycheck Protection Program and the loans associated with that. Okay, so we're going to handle a number of different topics today. First, we're going to discuss forgivable expenses. What expenses are forgivable under the Paycheck Protection Program? We're going to discuss reductions in forgiveness. How can those forgivable expenses, the amount that are eligible for forgiveness, be reduced under what circumstances? So there are a handful of tests there, the 75% requirement, the FTE test, as well as the wage reduction test. There are exemptions to those reductions in forgiveness that are available. So in the event that there is a reduction in forgiveness based on those three tests, there are exemptions available. We're going to discuss best practices for setting yourself up to maximize loan forgiveness, as well as some frequently asked questions, and then some questions from the participants as well. So diving right into the first topic, what expenses are eligible for forgiveness under the Paycheck Protection Program loan? You've gotten your funds, and so now you've got to figure out how can you spend those funds in a way that's going to be both in compliance with the law, but also set you up to have the largest percentage of that loan be forgiven as possible. So the first item that comes to everyone's mind is payroll costs. And there are a number of different components that are included in the definition of payroll costs, and we'll discuss them here. So the first item, the most obvious, salary, wages, and other cash compensation. So that includes any amounts that are given to the employee in cash. That's subject to a $50,385 cap. So it looks like based on the chat there was some difficulty here. The cap is $15,385 for the 8-week covered period. That's $100,000 times 8 weeks over 52. That's how they get to that number. Tips are also eligible, as well as vacation, paid time off, family leave, other types of leave. The one exception there is if you are required to offer the Families First Coronavirus Relief Act leave, both for sick and the child care portions. Those amounts that you're eligible to receive a credit for are not included in the definition of payroll costs. Severance payments are also eligible. For inclusion into payroll costs. Again, subject to that same $15,385 cash compensation. We had a question come in from a participant asking if bonuses were allowed to be included in the definition of payroll costs. We haven't received specific guidance from SBA on whether or not bonuses would be included. However, the current understanding is that reasonable bonuses would be allowed to be included in payroll costs, again, subject to that cap. However, if you had an employee who is typically working a handful of hours a week at a very low hourly rate, I'd advise against providing a significant bonus that's many times in addition to their normal compensation. So businesses that are customary in the line of business they're in shouldn't be problematic in terms of inclusion in payroll costs. Other items are group health benefits. So that includes the employer portion of the health insurance, dental insurance, vision insurance, similar insurance, and it's the employer portion, not the employee paid portion, that is included in payroll costs. Retirement benefits. So those are the employer portion of the defined benefit and defined contribution plan, and then state and local taxes. So that doesn't include state income taxes, but it is state and local taxes on employment. So for Iowa purposes, it is largely the unemployment insurance costs. So moving on to the other forgivable expenses, we've got utilities, and that includes electricity, phone costs, internet, water, gas, as well as trash. You got mortgage interest, and these are mortgage interest costs for mortgages that were incurred prior to February 15th. So if you've got a new mortgage after February 15th, these mortgage costs are not includable in forgivable expenses. Rent. So rent, again, the February 15th deadline. So it had to be a lease that was put into place prior to February 15th to be eligible for forgiveness. And with rent, there are a lot of businesses that operate or own their real property through another entity, a related party entity. And we haven't received any specific guidance on this, but there is a chance that to the extent that you are trying to use Paycheck Protection Program funds to pay a related party entity rent, that it could be problematic in terms of forgiveness. We haven't received specific and definitive guidance on that from SBA, but to the extent you have other forgivable expenses that you can use your Paycheck Protection Program loan funds, I think it would be more prudent to do that rather than risk of the potential related party transaction. Finally, interest on debt. And this is not a forgivable expense, but it is the only other permissible expense for Paycheck Protection Program funds. So you can use those funds to pay interest on other debt, not principal, and the same with mortgage interest, not principal there either. But those amounts would not be forgiven and would be subject to the 2-year loan at 1% interest, the first 6 months, no payments being required. So moving to the reductions in forgiveness that I was talking about before. So the first reduction is fairly straightforward. There's a 75% requirement for use on payroll costs during the 8-week covered period. The covered period begins the day that you receive the loan funds and runs through the next 8 weeks. So during that period, of all the amounts that are spent on forgivable expenses, at least 75% of those funds must be spent on payroll costs. And this is an all or nothing test. So it's very important that you are thinking and keeping track of this as you're spending these funds to make sure that you don't drop below the 75% requirement and risk having none of the loan be forgiven. The next test is the FTE test. And for this test, it's important that we define FTE or full-time employee equivalents. And the Act and the SBA has not provided specific guidance on how to calculate full-time employee equivalents yet. But the best guidance that's available is that we're going to calculate it the same way that we calculate full-time employee equivalents for purposes of the Affordable Care Act. And the way we do that is each employee that works on an average more than 32.5 hours a week is one full-time employee. And then for each part-time employee, for any given period, be it a 2-week pay period, for example, you're going to take all of the part-time hours worked, and for a 2-week pay period, you're going to divide that by 65, so 32.5 hours per week, which yields a full-time employee equivalent number for those part-time employees. And this is going to be important as we compare the number of full-time employee equivalents during the covered period to one of the two available comparison periods. It's worth noting that when you applied for the Paycheck Protection Program loan, the number of employees that they asked about on the application was employees rather than full-time employee equivalents, as we're dealing with here. So there's some dissonance into how the terms were used throughout the process. So the way that forgiveness reduction based on full-time employee equivalents is calculated is that you compare the number of full-time employee equivalents that you've retained during the 8-week covered period on average to one of the two comparison periods. There is the February 15th, 2019 through June 30, 2019 comparison period, so the average number of FTEs per 2-week period during that period, or January 1st, 2020 through February 29th, 2020. So it gives you the advantage of getting to select either of those tiered periods, whichever is more advantageous. There are differences for seasonal businesses, and if you're a seasonal business, you need to select the February 15, 2019 through June 30, 2019 period for purposes of comparison. So an example. So during the 8-week covered period, you have 7 full-time employee equivalents. In each of the two comparison periods, you had 10 full-time employee equivalents. You spent $100,000 on forgivable expenses. You satisfied the 75% payroll costs requirement. And as a result of that 7-to-10 ratio, only 70% of those forgivable expenses are going to be ultimately forgiven. So you have $30,000 that ended up being not forgiven as a result of that reduction in full-time employee equivalents. The next reduction in forgiveness test is the wage reduction test. And the way the wage reduction test works is you're allowed to reduce employee compensation up to 25% for those individuals making less than $100,000 on an annual basis. And the comparison periods here is the last complete quarter prior to the covered period. So here, almost everyone's going to be dealing with quarter 1, 2020. So you're looking on an annualized basis whether or not an individual's compensation was reduced by more than 25% by comparing the compensation during the 8-week covered period to quarter 1, 2020. Individuals making in excess of $100,000, they can have their compensation reduced by any amount without impact on forgiveness. So individuals making less than $100,000, to the extent that their compensation is reduced by more than 25%, there's going to be a dollar-for-dollar reduction in forgiveness available, and that's on an individual employee basis. So for example, if you had 4 employees each making $100,000 for purposes of easier math, and you've elected to reduce their compensation each to $50,000, so you have a 50% reduction in forgiveness, a 50% reduction in compensation for each of the employees. There, you're going to look at the difference between the 25% allowable reduction in compensation and the 50% actual reduction in compensation. So each of them is going to have $25,000 that is going to be reduced from the amount of forgivable expenses. So to the extent that you're needing to adjust compensation of your employees, given the realities of the business at this time, you're going to want to make sure that it's not in excess of $25,000 because you're going to see those corresponding reductions in forgiveness. So there are ways to restore those reductions in forgiveness that we're talking about. The first is the rehire restoration, and for each of these restoration tests, we're needing some additional guidance from SBA on exactly how they're going to be applied and what sort of ongoing obligations there are to either restore wages or retain folks that have been rehired. But generally, the way the rehire restoration test is applied is that when you're applying the FTE test that we talked about previously, comparing the FTEs during the covered period to the 2 previous comparison periods, you're going to exclude FTEs that were terminated between February 15th and April 26th, but then rehired prior to June 30, 2020. So the idea there, the general test is that to the extent you laid individuals off prior to receiving the Paycheck Protection Program loan, when there was a lot of uncertainty in your business, but you've rehired them prior to the end of the program, you're going to have those amounts that were reduced or reductions in forgiveness restored. And here, what we don't know is to what extent you're going to be required to offer those individuals employment on an ongoing basis after June 30. I think we can advise that you wouldn't be able to rehire on, for example, June 28th and then lay off again on July 2nd. But it's important to know what extent there's going to be an ongoing requirement to retain all those individuals before you rely on this test to restore forgiveness entirely. There's also a wage restoration test. Here, borrowers are entitled to exclude the wage reduction test, so the dollar-for-dollar reduction on a per-employee basis made during the period of February 15th to April 26th, if those wage reductions are restored prior to June 30. Here, the uncertainty is whether or not a backfill is required, so you're required to go back through all of the wage reductions and repay those, or whether you're just required to restore those wage levels to pre-wage reduction amounts prior to that June 30. And again, don't have good guidance on to what extent you're required to keep those wage levels at the previous wage through June 30. And the last item we'd like to cover is employees refusing to return to work. Here, SBA has issued some guidance. There was some uncertainty, some concern about individuals refusing to come back to work because they prefer to be higher unemployment rates, higher compensation from the additional unemployment compensation, or they were just concerned about safety. And SBA provided an FAQ indicating that if a good faith attempt to recall employees back to work was made in writing and the employee refused to come back to work at the same level of wages and hours, then those individuals could be excluded from the FTE test. We would recommend keeping contemporaneous records, both of the written transmission as well as the response from the employee in order to support that assertion. But it does provide some comfort for individuals that are attempting to call people back to work and maybe they are concerned or otherwise not wanting to come back to work for any number of reasons.
Okay, thanks, Eric. This is Rod Kubat. I'm going to speak a little bit about the best practices that we're recommending our clients employ in order to, I should have control now, right?
Yes.
Okay, so we'll walk through a number of these before we get into some questions and answers. So first of all, obviously, to maximize your loan forgiveness, you want to use the most PPP loan proceeds you can for the permitted purposes that we've talked about. Eric went through the various categories. There is the categories of forgivable expenses or payroll costs, covered mortgage interest, that is the interest on a mortgage that existed before February 15 of 2020, and then rent obligations, covered rent obligations, which again is rent on a lease that was in existence by February 15, 2020, and then covered utilities obligations, which again, they had to be utilities that were in service prior to February 15, 2020. And to the extent that you're spending your proceeds on these forgivable expenses or on these expenses, then you can include them for purposes of calculating the dollar amount of the loan forgiveness application that you seek. As Ryan pointed out, 75% of these proceeds need to be paid on for payroll costs in order to obtain loan forgiveness. We encourage you to segregate your PPP loan proceeds in a separate bank account and to draw directly from that bank account to make the payments that you're making on the forgivable expenses. Many of the lenders that we're aware of are automatically creating a separate escrow account into which they'll deposit your funds. We think it's the cleanest way to document the actual use of the proceeds if you pull from the account and actually pay from that account when you are paying any of these expenses. At a minimum, though, if you don't set up a separate bank account, clearly have a separate tracking account in your accounting records that you track the deposit of the funds into that account and the expenditures out of that account, so that's a very clear record. Ultimately, the borrower has the responsibility to prove that the proceeds were used for expenses that are forgivable. You want to document your PPP loan expenditures as you go along. So with each payroll period, you'll want to maintain in a separate payroll file records that you'll be able to produce to your lender when you apply for a loan forgiveness. The same thing with respect to any of the taxes that are paid, any of the retirement benefits that are paid, any of the health insurance that is paid. Similarly, if you have mortgage interest or rent obligations or utilities, keep those all separated, but do them as you're making the expenditures so that you keep the records ready and available, because you're going to want to apply for this forgiveness shortly after the 8-week period expires. So you want to maintain as well and keep track of your full-time equivalent records. These records really need to be maintained for the periods that Eric went over for conducting the FTE calculation. Those would be the periods of not only the covered period, which is ultimately the numerator in this calculation and test, but for the periods of February 15, 2019 to June 30, 2019, and also for January 1, 2020 to February 29, 2020, so that you have those records available and can produce them depending upon which ones you use in your calculation. Similarly, if you're a seasonal employer, you're going to want to maintain the records for the period that you choose as well. And then those records will need to also reflect, you should also maintain, along with the full-time equivalent records, the wage records for the prior quarter. As Eric mentioned, the quarter that will be in play will be Q1 of 2020. You want to have your wage records maintained for that period of time and segregated and readily available to use. In addition, you'll need to have any kind of records that you, any records that you have of the layoffs or the furloughs that were granted during the period of February 15 to April 26 of 2020, and also any wage reductions that occurred during that time period. If all of your layoffs and all of your wage reductions occurred during the February 15, 2020 and April 26, 2020 time period, I think it makes your calculation a whole lot simpler. But you'll need to maintain those, and then you'll have to have the records at the end of your covered period, that is the 8-week period. And for some people, that 8-week period could expire before, and most likely will expire before June 30 of 2020. So if you've done all of your rehiring and you've restored all of your wages before June 30, 2020, you can go ahead and file and apply for your loan forgiveness. If you are going to do some of your hiring later than your covered period, I think you're going to have to wait then until you finish your hiring or finish your wage restoration so that you can take full advantage of that June 30 time period. All of these records, if you keep them as you're going along or accumulate them now, you will have them available then when you have to make your application and show them to the lender. As I mentioned early on, the borrower has the burden of proving that they've met the requirements for loan forgiveness by providing these records. So be sure that you keep them, that you have them segregated by category, and that you provide them along with your application when you meet with your lender to apply for the loan forgiveness. If you don't have this documentation available to provide to the lender and ultimately to the SBA, you will not receive loan forgiveness. The other thing I wanted to mention was that you need to, let's see, I kind of got ahead of it. Compile your tax filings as well. Those would be, usually you can use your 941 tax filings, but you can use other payroll records. If you have a payroll service that you use, they should be able to provide the information that you need. And as Eric pointed out, these are primarily the state unemployment taxes, and it's the employer's share of those taxes that we need to be focusing on. Then apply for your forgiveness promptly. As we indicated, you have an 8-week period within which you can expend these funds, but after the 8-week period, any expenditures you make do not count. So you should be prepared to apply promptly if you want to get your loan forgiveness at an early stage. The loan forgiveness application will be made available by the lender, and I think the lender will have it available online for you to access and complete. Then you'll meet with the lender, you'll provide them with the documentation. Once the lender is satisfied that you've supported the application for loan forgiveness, the lender will accept it and submit it to the SBA, and the lender has 60 days from that date to advise you whether or not the loan forgiveness is going to be granted. Now, the other thing that I want to mention to you is you need to be prepared for an SBA audit because we believe that the SBA will review all of these files. And when they do, they are going to, there will be some, it'll be obvious, it won't be an issue. What they have said is that for any PPP loan of $2 million or more, they will audit the file. And what they're really going to be doing is looking to see whether or not the borrower is the type of person that this loan program really was intended to benefit. The SBA and the Treasury Department put out an FAQ about, I want to say it was the end of April, about a week ago, in which they indicated that large companies with other sources of liquidity to address their situation would be ones they do not view as being qualified for loans under the PPP. Each borrower has to certify that there's sufficient economic uncertainty as a result of the pandemic that they need this loan, and it's a good faith certification. And so the SBA and Treasury are using that as a basis to take a second look at some of these applications. And we've all read about those situations where companies were outed, so to speak, and returned their PPP loans because they really were not the type of company that both needed it, nor was it intended to benefit. So what we're telling people is to be prepared for an audit regardless. We think that the SBA will look at the underlying borrower and the application that was submitted and then compare it with what has happened. and may ask questions. And again, this is all an after the fact, hindsight kind of look. Facts and circumstances may exist on the day of the application that don't exist after the application or the loan has been granted and you've received your proceeds. So you need to keep a copy of your application and all of the records that you submitted in support of that application or showed to your lender in support of that application as part of your audit file, and then be documenting again why it is you needed that loan and how that loan benefited your business and your employees, and in maintaining the viability of the business during this time period. We're expecting, although we've not received it yet, further guidance from the SBA on this whole concept of loan forgiveness, and particularly on how they've promised they will issue additional guidance on this concept of having other sources of liquidity and the types of businesses that really are not intended to be benefited from these loans. But we don't have that yet. I would point out that it's possible the SBA and the Treasury Department will take a look at the requirement that you not be able to get credit elsewhere, or what they call the credit elsewhere requirements that are already in the SBA programs. The problem that they have with looking to those tests is that the CARES Act specifically states that the credit elsewhere test is not to be applied. It's not a requirement of the PPP loan. So they're going to have to find something that doesn't clearly fall in those particular principles in order to justify challenging someone's application for the loan. The other problem that they have is that numerous times they've stated that you're entitled to rely upon whatever the law was at the time, whatever the guidance was at the time, and you won't be prejudiced by subsequent changes in the guidance or the application of the law. What I can tell you is that somehow they're implying, using this good faith requirement, which is a very nebulous term, they'll use that after the fact to say, well, that's always been a part of the application, that's always been a part of the law, and so we don't think you exercise good faith in applying for this loan if they really want to challenge somebody. I think the risk is higher for the higher dollar amounts than it is for the lower dollar amounts. The other thing, observation I have that relates to this too, is that as of last night, I think of the $310 billion that had been authorized in the second CARES Act, the Supplemental Act, only 185 billion of it had been committed in loans. So something's going on. Either the SBA really is not processing them as quickly as they did with the first time around, or people are not applying as quickly, or maybe there isn't as big a need out there for these funds under these circumstances. It's just difficult to know right now. But I was struck with the fact that here we are a week later and only $185 billion of that total fund has been approved and loaned out. Now, it could be that it's just an SBA backlog. We heard the stories about how things crashed the first day. But hopefully everybody who needs one of those loans and is serious about applying for one of those, down to the lowest and neediest of the group, is able to get in there and get one. Eric, I think that covers my part of it. Are we ready now for the FAQs?
Yes. Okay.
Let's see.
Yeah, we can get started there. So the first question is, may a borrower deduct for federal income tax purposes the expense incurred in its business for which they've received a covered PPP loan and they receive forgiveness? Are the forgivable expenses, are they deductible? A week ago, the answer that we would have given is probably. Unfortunately, today the answer that we have to give is no. The IRS issued a notice indicating that these amounts were not deductible. This was surprising to practitioners as well as to Congress. And so Congress has indicated an intent, at least, in subsequent legislation to fix this issue, has sent a letter to the IRS expressing their displeasure. So our hope is, so the answer right now is no, they're not deductible. Our hope is that at some point in the future we get to change that answer to yes, and those expenses would be deductible, because that does reduce the benefit to PPP loan borrowers and sort of changes what people thought they were getting into. And the second question is, can a borrower prepay expenses? So there hasn't been specific guidance on this, but the guidance that is available indicates that the answer is no. So expenses must be incurred and paid during the covered period in order to be eligible for forgiveness. So you're not able to take future rent payments or future payroll obligations, bring them back into the covered period and have them be forgivable. They need to be expenses that are due during that covered period in order to be eligible for forgiveness. And given the way that the loan is calculated, to the extent that you're keeping on a number or most of your employees and you've got rent or some other obligations, you should be able to use up the funds on forgivable expenses without having to be creative and try to pull those future obligations into the covered period. And then the third question here, what if a borrower fires an employee or an employee retires? So that's one of the downsides of the FTE calculation, is it doesn't take into account sort of the normal business cycle. Sometimes an employee they're not showing up to work, they're not good at their job, for other reasons, they're going to be let go. Or an employee has decided to retire, maybe they made that decision far in advance of COVID-19. But those individuals are still taken into account for in the FTE test. One thing about the FTE test is that you're not required to hire the same employees or retain the same employees. It's just a matter of having full-time employee equivalents. So given COVID-19, your needs may have changed. You may have more need for individuals that are providing cleaning services in your business and less need for individuals doing other things. So you can hire different employees to provide different services based on your business needs. But if someone were to be fired or retired, that would count against you in your FTE calculations unless you were able to rehire someone. In the event you have a number of part-time employees and someone within your business is fired or retires, what you can do is you can increase the number of hours being paid to those part-time employees, even if they're not providing services, in order to increase the number of FTEs for purposes of the calculation. And depending on the math and the number of other forgivable expenses you have, that can be an economically advantaged decision for you, even though you're paying individuals for not necessarily providing services. So that's an analysis you're going to want to conduct before making that decision. But it's certainly a possibility that it can be in your benefit to pay part-time employees additional hours for which they're not providing services in order to increase the FTE count.
So what happens if an employee refuses to come back to work? Well, Eric alluded to this earlier, and there is specific guidance related to this. If you have an employee that's been furloughed and you make a good faith offer to the employee to come back to work in the same job with the same hours and the same salary, and it's made in writing, and the employee refuses to come back, then you don't have to count that employee for purposes of the FTE calculations and the hiring back calculations. The thought process there is that you've made a good faith effort to try to hire the employee, and it's the employee's choice not to take advantage of that. It is very clear you do need to document that offer and document the employee's refusal to accept it. And is this one you wanted to cover, or me, Eric?
I've got this one. So
all right,
we've alluded to this previously. What if a fourth payroll date falls outside of the 8-week period? So can a borrower accelerate the pay period? So the general answer to that question is no. We can't prepay expenses. But and my hope here is that we're going to get guidance from the SBA clarifying how we're going to treat the pay periods, because for most borrowers, they're not going to line up neatly where you're going to be able to get 4 2-week pay periods in an 8-week period. And so something I'm advising clients to think about is thinking about for that last pay period, doing a shortened pay period. So It could be that you, instead of usually you have 2 full weeks in a pay period, here you might have a 10-day pay period. And so you're going to make that payment early in order to make sure that it is both incurred, so the days have been worked, and paid. Dollars have actually been transferred to employees within the covered period. Again, my hope is that the forgiveness guidance will indicate and allow employers to proceed in sort of the way they have and make common sense decisions. But in the absence of that, that's certainly something to think about and be prepared to do. To the extent you're doing it yourself, probably a little bit easier. To the extent you're using a third-party service provider, that's something you may want to be discussing now because it'd be outside of the ordinary course of business, and you want to make sure it's handled correctly. This is me again. So if a company has deferred the payment of the employer share of Social Security under Section 2302 of the CARES Act. So under the CARES Act, you're allowed to defer Social Security taxes half until December 31st, 2021, half until December 31st, 2022. If you've done that, are you still eligible for loan forgiveness? The answer here is yes. You can defer those amounts up until a determination on forgiveness has been made. So once the bank has definitively provided a decision that your loan has been forgiven and how much, at that point, your deferral of payroll taxes must cease. But prior to then, so from the date the CARES Act has passed all the way until that forgiveness decision is made, you can defer those taxes, and that can be have a moderate impact on your short and medium term cash flows. If you're a labor heavy business, that's a little more than 6% of employee wages. So that can be a real difference maker. Essentially acts as a no interest loan with 2 balloon payments, half on the 31st in 2021 and half December 31, 2022.
Okay, so the next question is, can a borrower continue to use PPP loan proceeds after the 8-week forgiveness period expires? The answer to that is yes. Again, 2 points. One is you have to use those proceeds only for purposes of paying permitted expenses, which would be the ones we've talked about, payroll costs, covered rent obligation, covered mortgage obligations, covered utilities, and interest on debt that existed prior to February 15th. If you don't use it for those purposes, then you have technically violated the law, and you may be required to not only repay them, but also required to, you could have some penalties imposed on you depending upon what you used them for. Now, understand too that any of these proceeds used for these covered expenses the forgivable expenses after the 8-week forgiveness period expires will not count towards forgiveness, but you can continue to use them for those purposes. Take the next one, Eric.
Yep. So the next question is, can a partner or LLC member include retirement contributions that take them over the $100,000 cash compensation limit? And so as we discussed before, for employees, the $100,000 limit applies only to cash compensation. So health benefits, retirement contributions in excess of $100,000 are still included in forgivable expenses as payroll costs. Unfortunately, for partners or LLC members, the $100,000 cap is all inclusive. So it includes healthcare, retirements, and other items that are excluded from the cap for employees. So partners and LLC members are eligible to participate in the PPP loan for their distributions to the extent that they actively participate in the business as a self-employed individual. They're gonna include those distributions in the calculation of payroll costs and the loan, and those amounts are forgivable, but only up to that $100,000 cap, not in excess of $100,000.
Okay, then the next question we have is, can I repay my loan with PPP loan proceeds that I don't use? And the answer to that is yes. You may still have to pay some interest, but you can use the PPP loan proceeds to repay the loan. Then the next one, can I return my PPP loan proceeds if circumstances change and I don't need them? The answer to that is yes, you can return them. Right now, in light of the FAQs that were recently issued by Treasury and SBA relating to whether or not large companies qualified for these loans, the SBA and Treasury gave any borrower until May 7th to evaluate whether they should have been, whether they qualified for the loan and the certification they made was in good faith. And if not, or for any reason, return the proceeds. That date has now been extended to May 14th. But beyond that, even if you had a good faith basis for making the certification, circumstances looked dire at the time that you made the application, or you were anticipating negative consequences, circumstances changed and you don't have those negative consequences, you're entitled to send back the PPP loan proceeds without any kind of penalty. You may have to pay interest on that. Most likely will pay interest on that. But we also encourage you that at any time, if you're returning PPP loan proceeds, that you have an explanation cover letter drafted that explains why you're doing what you're doing, and definitely protect yourself at least from the beginning when you return the proceeds from a potential audit. Eric, that's all the questions we have here, I think. So do you have any questions that have been sent in?
Do you guys want to read the questions that we received in the chat, or do you want us to read them and then answer them? How do you want to handle that?
Why don't I, Ryan, Eric, if you would like to read them. I had been trying to kind of keep track and see what you may have already answered, but I think you're going to know that best. So if you are willing to kind of start up there, we had one a little while ago from Ryan, and if you are interested and willing to go through those and answer anything that hasn't already been addressed, I think that might make most sense instead of me reading questions that you've already touched on.
Okay, yeah, I'll read them, and then Rod, if there's a question that or you want to answer it, just interrupt me. Sure. And then you've got it.
I'm not locating them right now anyway, so I'll just listen and I'll answer something if you want me to.
Okay, so the first question is, what will the official forgiveness look like? Is it going to be a document from a bank, from SBA, from both?
Well, I don't think we really know for sure what it's going to look like, but in most cases, you've executed a note, so you should get a note back marked paid in full or canceled or terminated or forgiven, something like that. But you should get a written document of some sort along with the note marked canceled or marked paid.
Next question is, will there be an appeal process if you don't receive the forgiveness that you expect? And to that, we don't know yet. I guess I would anticipate that there would be some manner of appeal process or some way to work with your bank to discuss or appeal their decision on forgiveness. But until we get additional guidance from SBA on the full forgiveness process, so we know generally what is forgivable and what isn't, but until we receive additional information on the process, it's hard to know what those appeal rights would look like, but I'd anticipate some manner of appeal process. So the next question is, if borrowers have received funds prior to a payroll and they then use the funds for a payroll, even if the payroll was for the time where the employees were working in the week or 2 weeks leading up to the receipt of the PPP loan funds?
That's one of those tough ones, isn't it? We don't really know how the SBA is going to treat those. What the statute says, it has to be incurred and paid during the covered period, and the covered period starts on the date that you received the loan proceeds. So just based strictly on the statute, any payroll incurred prior to the date you received the funds would not be included, even if the pay date was in the covered period. I think that's a gray area that the SBA is just going to have to give guidance on. And I would hope that they'd be very liberal in that guidance and allow that to occur. Your thoughts, Eric? Anything different?
I would guess that the SBA is going to allow 8 weeks of payroll. So they're not going, because if they're requiring you to both have the employees work and then also make the payment during the covered period, it's possible that you'd only be able to fit in 6 weeks of payroll in the 8 weeks, which would make it very hard to get full forgiveness. So I'd anticipate the guidelines that come out allowing for the full 8 weeks of payroll, but I don't know where they're going to do the cutoff on the front end or the back end. So I think that's some place that we need additional guidance on. Our hope is that we're going to get that relatively soon, because there's individuals that got these proceeds April 6th, so coming up on 5 or 6 weeks into the covered period. So to the extent that they need to make adjustments. Next questions. For a sole proprietorship, would they be required to pay themselves just 75% of the total loan amounts? And would just the check going from the business into the personal account be sufficient as evidence?
Where were they deposited? I'm sorry.
The funds were deposited into the business account, so not a separate account, just into the normal business account.
Sure. As long as you're able to document that those are your PPP proceeds and that they were used for payment of the forgivable expenses, then you're okay. What the problem that comes up sometimes is if they get commingled with other funds, there are some tricky rules that get applied as to which funds came out for what purpose. So that's why we've been recommending keeping the funds in a separate account for that reason. But as long as you're able to document it and show that you paid it for that purpose, you should be okay.
The next question was whether someone can accept both a PPP and an SBA disaster loan. And the answer to that is yes, you can accept both loans. The grant portion of the disaster loans, so the immediately available funds, those reduce the balance of your PPP loan, so they're excluded from the balance of the PPP loan. So to the extent you get the disaster loan after the PPP loan, there might be some true up at the forgiveness, during the forgiveness determination, but that's a relatively small portion of that disaster loan. But you are eligible for both. They have different purposes. You're going to want to make sure that the PPP loan funds are used for permissible purposes, and then use the SBA disaster loan funds for other purposes. The next question is the 75% rule based on the total loan proceeds or the funds spent during the covered period?
Well, you're supposed to spend 75% of the 75% of the loan proceeds on payroll costs. And in order to get forgiveness, you need to spend it during that covered period of time on payroll costs.
Next question. If we hired a part-time employee after receiving the loan because they're seasonal work, can their payroll be included in the calculations? The answer to that is yes. You can hire more employees or different employees and have their wages included in payroll costs. There's a question about whether or not we've heard anything on the 8-week covered period being extended.
I haven't heard anything, have you?
No, I've heard a lot of people asking for it, but I haven't heard anything from government or anyone with authority saying that that was something that was planned. So it would certainly help people, but at this time, we don't have any information suggesting that. Next question, are 1099 contractors or other outsourced services considered employees for purposes of forgiveness? If not forgivable, are they eligible expenses? And the answer to both of those is no, that 1099 independent contractors are not employees for purposes of payroll costs, and those amounts are not permissible or forgivable. The 1099 independent contractors are eligible to apply for their own individual Paycheck Protection Program loan.
Hey, Eric and Rod, I think just in the interest of time, I do know that some people will have to, are already hopping off. If you want to do one more question, and then Ryan and I will take whatever is left for questions, email them to the two of you, and hopefully, and then we will send them out to the full group after. But I know we you know, also have folks that need to hop on to other things here at 2 o'clock. So do you want to just do this one more question and then we'll wrap up?
Rod, does the 8-week covered period begin when the loan was approved or when the funds were deposited?
When the funds are deposited. It's the day the loan proceeds are advanced.
And last question is on hazard pay. So there's an employer that's paid bonuses each week. So the hazard pay is included in payroll costs, subject to the cap on $100,000 and it being reasonable. So you couldn't. I think you'd have a harder time saying someone who usually made $9 an hour, now you're going to pay them 35. But reasonable increases in compensation as part of hazard pay would be included in payroll costs.
Thank you both so much for joining us, for going through this in a lot of detail. And I realize we did, like I said, didn't get to everyone's question, but we will get them answered. We know this is incredibly important for all of our members and investors to understand and get the information they need to ensure that they're receiving that forgiveness as promised. So I have 2 quick updates I just want to mention. One, if you are have been using the payment protection program, and if you are willing and interested in sharing your experience on that, positive or negative, our team is interested in hearing from you so that we can share that with the SBA. So if you are willing to share that experience, if you can contact Meg Schneider from the partnership, mschneider@dsmpartnership.com, would love to have that conversation. And then secondly, I am putting in a survey link at the bottom of the chat box. This is the partnership has been asking for seeking feedback for our DSM Forward effort. We are pulling together a collection of online resources and best practices that will help guide members, investors, and the community as decisions are made to reopen. And we continue to seek feedback on that. So please go ahead and fill that out if you'd like. Again, any questions we have received, we will get back to the group. And if we can I just want to thank Eric and Rod one more time for your time, your expertise today. And Ryan, thanks for doing all the coordination of today's event, our webinar. We will be sharing, as I said, the recorded webinar and PowerPoint slides after as well. Thank you all and have a great rest of the day.